Welcome to Insights with Thomas Caldwell on Thursday, August the 7th, 2025. Tom, there's so much uncertainty right now around President Trump. So let's talk about, there's so many things to talk about, Canada's position, the Fed, interest rates, and those unemployment numbers.
Well, it's an interesting period we're going through, obviously, and the uncertainty has been going on ever since he got elected, and it's going to go on for a period of time. I think the thing to keep in mind is the U.S. economy is still doing quite well. The inflation numbers, they're not too bad yet. Everybody keeps talking about inflation to come. Not too concerned about that yet, because remember, these tariffs are like a hidden GST. They're trying to do this to cover some of their deficits. It'll be interesting to see if it works or not. The unemployment numbers were kind of interesting because, as you know, Trump has been trying to hit Mr. Powell, chairman of the Federal Reserve. He's not doing the job reducing interest rates and calling him all kinds of names, which is pretty bizarre. But as it turned out, Trump was right. The unemployment numbers were low. And on one hand, it upsets him because he thinks I'm doing a great job here, but he fired the head of the department. Now, I personally have always been cynical of government statistics. When people tell me inflation's 2%, I go to a grocery store and buy gas. No, it's not. It's nowhere near that. So I've always treated it with a grain of salt. But actually, it works for the market because what it implies, if unemployment, or unemployment is increasing, then it means the Federal Reserve is going to start to reduce interest rates. And if we have a trend of reducing interest rates, that's a good underpinning for market strength, coupled with the fact, the economy is doing reasonably well. But we're going to have this uncertainty. The big question in my mind is where Mr. Carney is at in the process. I'm glad to see he's backing off, saying, okay, if you do this, we're going to do that. You don't get into a stamping fight with an elephant, particularly one that's a little bit bizarre in their behavior. So I do think it's interesting he's backing off a little bit and trying to negotiate. I think that's important. I wonder whether, though, he's really trying to use this period of time to reduce trade barriers provincially to see what kind of our trade we can absorb internally without the United States. I think that's part of his plan. I might be giving him too much credit there, but we'll be interested to see. But so far, there's a lot of talk, a lot of speechifying, but nothing else really coming out yet. But we'll see. There's still time to go. But I think we're handling it in the best way possible. Don't get into a fight with this guy, because he's got the cards and we don't, as he said before.
So you mentioned markets earlier. Are they still strong overall?
They have been. It's been actually a pretty good year so far this year. You're going to have the ups and downs on blips going on, whether it be on energy prices and whatever he's threatening to do the next time. But on balance, the U.S. economy has been quite strong. The inflation has been relatively under control. Interest rates aren't that high right now as well. And you're having a good earnings season. So this is underpinning the market. And you're having growth in the tech stocks as well. So there's a lot happening that is essentially positive. You can't take your eye off what is going on fundamentally and get caught up in the insanity. The problem with insanity is you get sucked into the insanity. And that really sort of distracts. As one of our ex-partners, our retired partners, Dennis Freeman, said, don't get faked out and don't get faked in. You just got to stand back and say, the craziness will pass at some point in time. Fundamentals still okay for the time being.
Thank you so much for your insights, Tom.
You're very welcome.
Thank you all for watching. Bye for now.